Hello, hello, hello. Welcome, welcome, welcome to another Mortgage Monday. First, I want to say thank you to the Miss Yo-Yo Show. She jumped in early today. And then Tiffany Chanel, thank you so much. And now Living Better with Style. And I see now that we have a Candy C raid, which is awesome, awesome, awesome. So, guys, give me just a second. I'm going to open up the screens and I'm going to go upstairs because I knew this bird was not going to let me be great. So, I'm going to mute you guys and then I'll be right back on the line. Thank you guys for coming. I do see Killer Whale. Hi, Killer Whale Channels. Hey, how are you? Welcome, welcome, welcome. Thank you for coming, guys. I had to change my vineyard because I knew that bird. I just thought she was going to be really nice to me today, but she decided she wanted to squawk right when I hit go live. So that's okay. You guys will still hear the presentation, and I appreciate you guys for coming out today. How's everybody doing? How was your weekend? Hey, Taylor, welcome, welcome. Thank you for coming. Thank you for coming. Did you guys bring your pen, your paper, and your questions? I'm going to open up my screens here. This is funny. I didn't even get a notification. Hey, Short Bus, how are you? Welcome. Thank you for coming. Hey, guys, don't forget, thumbs me up, share me out. Sharing is caring. I guess this would work if I put my password in. Thank you for sharing me out, Auntie Yo-Yo. Thank you for sharing me, the Miss Yo-Yo Show. I appreciate you. Okay, so the first thing I'm going to do now is open up the screens for you guys, but I'm going to give everybody a couple of more minutes to come in, and then we'll get started. And you know what? I need to turn this air conditioning down because it's kind of warm up here. Thank you, Angels Lives. Hey, thank you, Angel. You shared me out. Thank you, dear. Thank you. I appreciate you. Thank you guys for sharing. Thank you, Killer Whale. Thank you for sharing me out. I appreciate you. Okay, I need to turn this AC down because it is totally warm in here. Okay, guys. Candy C, hey, Candy C, hey, how are you? Welcome. Thank you for coming. Thank you for the raid. And can someone drop Candy C's link, please, since she rated me? That would be great. If you're a mod, please drop her link for me. Please, please, please. Candy C says, hey, Auntie. Hey, Miss Rucker. Awesome sauce. You ever had one of those days where you just knew you were all ready and Tiffany, thank you for sharing me out, dear. Thank you. You think you're all organized? Yeah, I thought I was that way too today, but it seems like I can't get my brain to think for me, not at all. Thank you, Victoriously Shay. I'm so glad you came in. Is Shay in here yet? I was looking for story time with Shay, guys. She done changed her screen name. Like, where is she? Okay, guys. Alrighty. It's coming up now. Thank you, Victoriously Shay. I'm so glad. There we go. Now I can see everything. All right, let me get you all opened up here. Thank you for dropping the link, Tiffany. I appreciate you guys. I really do. All right, and let me get y'all some visuals here. We're going to talk about some FHA loans today, guys. Thank you, Shay. Thank you for listening. Thank you. Thank you. Thank you. I appreciate you. Hey, Jaden. How are you? Thank you for coming. I appreciate you stepping by. Stopping by. Okay, guys, let's see if this screens work out for us today. And it is 7:35 p.m. Eastern Standard Time on this beautiful Monday. So I want to welcome you guys to yet again another Mortgage Monday. And today we're going to talk about the popular loan type FHA. And I don't know if any of you have heard, or some of you may have an FHA. I had an FHA loan many a times, and I actually like the FHA loan products. But we're going to talk today a little bit about the FHA loans. But guys, please, thanks for sharing me out. Give me the thumbs up, make a comment. And if you're not a subscriber already, welcome. And please do subscribe and click that notification bell so you can be reminded of my videos when they're uploaded and my lives. Okay, so I'm going to go ahead and we'll talk about, my disclaimer. I have to give y'all the disclaimer. And that's because I don't want anybody coming back saying, you gave me a loan approval. Wrong answer. I'm not sitting on millions of dollars, so I cannot buy or pay for a loan. So with that being said, I have to give y'all this disclaimer, noting that I am a licensed mortgage professional. This chat is not meant to clean credit nor provide loan approvals. I am simply offering advice and support to make a healthier credit profile and homeowner experience. This chat also does not constitute a loan approval or any interference with a lender or a realtor. However, if you do have questions, I'll be happy to answer the questions for you. If you need connections, or if you need to meet a loan officer or a lender or a broker or a realtor, I'll be happy to share that information with you according to your state, because each state has different rules. The programs itself has the same guidelines and rules, but with different states, your closing amounts and your dollars are going to be different. So I will be happy to refer that to you guys. Okay, so what's the big hype on an FHA loan? Does anybody know what the big hype is on an FHA loan? And I should have did a test. Can you guys actually really hear me? I'm so sorry. That should have been the first thing. If you can hear me, please drop me a heart. Beulah. Beulah. Can you hear me? Can you hear me? Can you hear me? I'm waiting for a heart. Thank you, the Yo-Yo Show. I like that. That's pretty cool. Thank you so very much for that. Okay, so we'll keep it going. Okay, so does anybody know what an FHA, what's the hype about the big FHA loans? Thank you, Taylor. Thank you for responding. I appreciate you guys. I really do. Good answer, Tiffany. That is one. That is correct. Thank you so much for answering. All right, and I'm wishing this thing would, I spoke too soon. There we go. Finally popped back up. Okay, so with an FHA loan, this loan will allow the potential borrower to finance a loan with higher ratios. That's the debt to income ratios. Also, and I don't recommend that, guys. And we talked about that too. Yes, like 3%. Yes, 3% of the 5%. Actually, they've gotten it down to now where you can get it at least with 1.5%. It's a whole bunch of calculations involved with that, and I will go over that at a later video. Thank you, Taylor, for answering. So yes, they will allow you to borrow, finance a loan with higher debt to income ratios. But again, I don't recommend that, because just because you can get approved for a higher amount, you got to think about the long run. I don't want people to go out and overspend. And if you guys go, I talk about that on this live or on this channel, but also Tiffany Chanel talks about it on her Monday Makeover. Money Makeover Monday. Did I say that right, Tiffany? I'm gonna write that down. I keep forgetting it. I'm so sorry, dear. So we'll talk about the minimum credit scores, guys. So they will allow you to, again, finance with a lower down payment amount. They will let 100% of your down payment to be a gift. They will also allow you to, they will also have a lower credit score. Now, with the credit scores, that is going to be different lender to lender, because some lenders will let you go as low as a 580. Some want you to have a 600 or a 620. So it depends on the lender, and how they determine that is, thank you, Tiffany. So it is Money Makeover Mondays, guys. And I got to get that right, because every week I ask her that. That's an MS moment. So don't charge it to my heart, charge it to this brain here. But yes, the credit scores could be as low as 580, but it depends on the lender. Not all lenders will allow you to have a 580, but there's a whole bunch of other guidelines that they look at to determine. So even if they say their guidelines is 580 and you have a 580 or a 581 or even a 585, that lender could look at the other information in your credit profile. They will look at your other information, and that will determine if that 580 is going to work for that program. So they look at your spending habits, your bank statements, your pay stubs, your tax returns, your W-2s. All of those things are factored into that particular loan. So people get it confused when they say, oh, all you need is a 580. That's 580 for them to actually look at your loan. But they are going to scrub that loan, dear. They're going to scrub it, because, and I don't blame them, because I've said this many times before, if I am loaning you hundreds of thousands of dollars, I want to know how I'm going to get my money back. And that's how the lender looks at the file. So that's one of the hypes about the FHA loan, though. Okay. Also with an FHA loan, they will allow you help when you're in a crisis. So they have programs that's available for you. Can you explain to me what gift means? Yes. Okay, so Shay, I'm just going to call you Shay because I know who you are. Shay, with gift money, that's for your down payment. So with an FHA loan, you can get a loan at the 97.5% down, but you got to have your down payment amount. That includes your down payment plus your closing costs. So if you have a 3% down loan and your closing cost is going to cost you another 2%, and you have to be able to document that you have that money to close. Well, with FHA, they will allow you to get gift money from a family member, and there are some programs still available that offers 100% financing through your state. So that's what the gift means, Shay. They will allow you to get money from your family as long as it's a legitimate gift. They cannot expect repayment on that money. They have a form that you have to fill out, and the person that's gifting you that money, they have to sign that document saying that that is 100% a gift and they're not expecting any money back. So did that answer your question, Shay? And thank you for the question too. And you're self-employed, Life of Monique. First of all, by the way, thank you for joining me today. I've not seen you in my live before, so thank you for coming. And yes, if you're self-employed, you'll have to have like your your 1099s and all of your schedules on your tax returns, because we look at every line of your tax returns. And you have to have 2 years for that as well. And with that, you can still qualify for an FHA loan as long as the funds and your debt to income ratios and your credit and all the bank statements and things are in line. Shay, did that answer your question, or do you need me to go further into detail? Okay, and Shay, you can reach me on IG if you have any further questions on that. And I need to share my number with you on, I'll DM you my number because we need to talk anyway, because you asked some questions about some other things. So I got 10 amazing content creators in the live, and I appreciate each and every one of you for coming out with me today. Okay, guys, so let's talk about FHA loans a little bit further. Does anybody know? Okay, great. Thanks, Shay. Okay, so who is FHA? What is FHA? Okay, so FHA stands for Federal Housing Administration. It is the United States government agency that was founded by President Franklin D. Roosevelt during the National Housing Act in 1934. Now, if you were on my live for Veterans Day for VA loans, I mentioned that, the National Housing Act. Okay, and then the second part to it is HUD. And HUD is the Housing and Urban Development. And it is the cabinet department in the executive branch of the United States federal government. So those two are involved with your FHA loans. Now, I will step back and tell you a little something more about when I mentioned they will help you in a time of crisis. Now, they've changed this a little. Before, and I cannot remember the year to the exact, but I'll make a side note of that and I will have that available for you on next Monday. But you sign some forms when you close, and they're the government forms, and they're the FHA VA loans forms. On that form, there is a document that you sign that states that if you are to get behind on your mortgage, you can contact the Department of Housing and Urban Development. They had a number on the form. Those do all of the housing acts. Taylor, that is a question. He did the VA and he did the FHA, but conventional loans, those are, we call them loose loans because the lender can kind of do what they want. They make their own guidelines, but they do go through Fannie Mae and Freddie Mac. So they have somebody that they answer to, but for the most part, they don't have the government saying, this is what rates you can use and this is what you can and cannot do. So that's the difference. That's another type of investor, which is either Freddie or Fannie. And Ginnie Mae used to be involved with housing, but I haven't seen a Ginnie Mac loan in a long time. So back in the day, if someone got behind on their mortgage, they would call their lender, and the lender would say, well, we can help you. We can just make a payment and a half or X amount of months into your current. Well, HUD says, well, that's not going to work, because if they can't afford the one payment, we've got to give them some kind of breathing room. So if they've had an incident where they've lost their job or they had medical problems, things of that nature, they will actually work with them to get their loan approved. Well, what they did on those forms back in the day, and that hasn't been too long ago, that was probably about maybe 15 years ago, they would fill out some paperwork and they would do like a modification on your FHA loan, and they would pretty much re-underwrite your file to see if you really actually can afford the house before they foreclose. And what they will do is they'll take you through another form of underwriting, and then they'll say, can you pay at least one payment, or can you pay something towards your delinquent bill? And if you can, then they will set it off and they will put your delinquent amount to the end of your loan. But that amount is there as long as your loan has not been paid off. But when your loan is paid off, you have to immediately repay whatever they put on the back end. So that was one of the things they did for the customers. And it's changed a little, but they do have people that's available to talk to you, and your state has different types of programs that's available to help a customer that has gone under a crisis. Now, another thing that I can remember that happened with the housing market back in the 70s here in Georgia, a certain area was like really, really down. They had a lot of foreclosures, people had moved out. And I'm just going to be honest and say this, guys. So don't judge me. I don't want anybody to call me. Hello, Anita Williams. Welcome, welcome, welcome. Thank you for coming to the live. I will say this, and I don't want anybody to take this the wrong way, because this is exactly what happened. There was a particular area in Atlanta, and all of, not all, but many of the Caucasians moved out of the city and moved out to the suburbs. So the housing market started crumbling, and it got really, really bad. So the government came in and said, we got to do this for this area. We cannot let these houses sit vacant, and we've got to get it back in a good area for the city of Atlanta. So, hey, Pickadale, welcome. Hey, Mama Dale, hey, welcome. So what they ended up doing was having the homes for sale for $1. They call them dollar homes. So you can buy a house in Atlanta for $1. A lot of the homes needed to be repaired and fixed up, but you can buy a home for $1 back then. They did have stipulations on it, but you had to live in the home and things like that. So they still have like the officer next door program, the doctor next door program, things like that. They still have those available in certain areas. But that's what happened back in the day. That's how they got Georgia back up on the map. Not Georgia, I'm sorry, the city of Atlanta. So that's what the housing and, the Federal Housing Administration and the Housing and Urban Development stood for. Okay. Now, each lender, again, has their own guidelines as far as what type of loan they're going to accept and what loan they're not going to accept. They have their certain guidelines that we have spoke about on maybe the first or second. Hey, Natural Way of Cotty. Hey, welcome, sis. Thank you for coming. Thank you so much. I appreciate you coming in. Guys, I have 13 amazing content creators in the live today, and I certainly appreciate each and every one of you. If you do not have someone in the live, you are welcome to connect, but please review the rules of the chat in my description box. But I also want you guys to have fun, enjoy, have questions. I'll answer them. And some of the questions may be for another presentation, and I will just give you a brief answer to it, but we will have to keep it moving as far as the slides are concerned. So again, I appreciate you guys for being here. So the guidelines are different with each lender for what they consider approvable loans. But with FHA loans, they have a set of guidelines that each lender has to follow those guidelines. And that's called direct endorsement, which is what I am, a direct endorsed underwriter. So I can underwrite FHA loans. So we look at the same picture as a conventional loan would be, but we have to take it a little bit easier because the FHA loans allow things to happen that does not happen on conventional. Now, first of all, conventional loans have a higher interest rate, but on the not the interest rate, a higher credit score requirement. But FHA doesn't have that. It's good to have a high credit score. And a lot of people do want to go FHA because chances are they don't have the 3% laying around. So those are one of the reasons why they set FHA aside, and they have a certain type of underwriter to look at those files. Not everybody that works at a mortgage company is a FHA underwriter. You have to go through training. You have to do, every year you have to go and get recertified. So that's the thing with FHA loans. Now, back to the subject of the guidelines. They do know that you're going to have pay stubs, W-2s, bank statements, appraisals, sales contracts, or if you're refinancing, it's two different types. But the guidelines are pretty much the same across the board with an FHA loan. There are some tricky things that happen with an FHA loan, but the underwriter definitely is skilled to underwrite those loans. We know that the debt to income ratio is 41% on an FHA loan. However, they use the Fannie Mac LP or loan prospector, or that's the Freddie Mac LP loan prospector, or Fannie Mae desktop underwriting. And if they have, and I've seen this happen, I've seen somebody with a 60% debt to income ratio get approved through FHA. But I'm going to tell you how. Their credit was nice, they had a good credit score, and they had reserves. Those two things will get you an approval at a higher DTI. But again, I don't recommend you to go out and buy a property because you qualify for that amount. You have to be a little more logical because things happen, especially in this day and time. Hey, Coach Sherry, how are you? She's in real estate school, and I will be complete at the end of the month. All right, great, awesome. Congratulations. Congratulations. Hey, when you are finished and you sign up, yes, short bus, a good credit is a must. When you get your person that you're going to do your real estate through, if you want to send me something through Instagram and let me know who and where, I will be happy to share your information out with a bunch of loan officers that I deal with still. If that's okay with you, just send me the information on my DM and I'll be happy to share you out. Okay, so back to talking. Yes, you have to have good credit is going to get you pretty much anywhere. Good credit is going to get you a lot. And reserves is going to get you. And I'm not going to say if you got an 850 credit score but you don't have reserves, but your ratios is only 70%. I'm not going to say that that's going to get an approval because it will kick back certain things. So, but underwriters do actually look at everything on your file. They take your pay stubs, and people are like, well, where are they getting this information from? Your pay stubs, your tax returns, and your credit tells a lot. It paints the picture. You can look at somebody's credit and you can see how much they've actually purchased, how much they've paid. If they're the ones that's just paying the minimum, you guys know if you're just paying the minimum, that you're welcome. If you're just paying the minimum, you're going to take forever and they're going to eat all of that finance money, all the interest that you're giving them just because you paid the minimum. Always try to pay something extra. And I don't know if Tiffany has talked about that in one of her lives, but that's one of the recommendations. But they look at your credit. They see how frugal or how careless you are with your credit. Hey, Wilson, for real, thank you for joining. Thank you so much. I appreciate you coming. So they take into consideration that. They also look at your bank statement. So if your bank statement, if you've had a NSF here and there, or if you are at the end of the month, when your bank statement comes out, and every month you have no money left, or you have $2 or $3 left in your bank account, that's a sign that you are barely making it for what you're doing. So they're going to be very strict on that. Also with your pay stub, they'll look at your pay stub and they'll say, they have 401k, which is a good thing because they take your 401k. We talk about credit score and mortgages in your video. Okay, so y'all check her video out because Tiffany Chanel talked about it in her video. So if you have, what was that? Oh, your bank statement. So they look at your bank statement. They scrutinize everything, but do you blame them? Again, if you are giving somebody even $500 and they say they're going to pay you back, you are going to want to know how you're going to get your money back, right? And you're going to start putting things together and say, well, the repo man is in their yard like every so many months, or they're always asking for money, or I'm seeing cutoff notices on their doors and things like that. So you're going to think about that before you give that money out. And I've learned a long time ago with family, you can't consider it a loan because you know you're not going to get it. It's 8 o'clock. Sorry, guys, that's my computer. Okay, so on with the next. So in other words, they actually scrutinize that file. They don't do it on purpose, or they don't do it because they're saying, oh, this person is short or this person is tall or whatever, just to keep it clean. They do it to everybody because they want to make sure that that bank is going to get their money back. But not only that, if they get foreclosures in their cubbyhole, they actually get dinged and they lose opportunities to get other programs. Kind of like in school, if you get a lot of students that pass and do well on testing, they give them titles and they give them books and things like that. That's exactly how the mortgage is. They look at it if they have a high foreclosure rate. And as a broker, if we did loans that was foreclosed on, we have to have insurance, because guess what? The bank can come back at me and make me buy that loan back. And again, I don't have $1 million sitting around to pay for a loan that somebody foreclosed on. So again, what is needed to qualify? We talked about that in week 1, and that's your basic things. You need your bank statements, all pages of your bank statement. Even if that last page says left blank intentionally, you have to provide all pages. You have to do your pay stubs, 1 month pay stubs, consecutive. So if you're paid every week, we need every week's payment pay stubs consecutively. If you are paid twice a month, we need those pay stubs consecutively. We don't need a January's pay stub and a June's pay stub. That is not going to do us any good. And people that normally do that, they think they're smart. They do that because they're hiding something. And we're going to find it one way or another, because we do another verification before closing and sometimes at the closing table. So you need the pay stubs, you need the W-2s, you need all pages of your tax returns. And again, if you are writing everything off, don't expect to get $1 million home because you show no income. Divorce decrees, child support paper, 401k statements consecutive. And if you are doing loans, if you owe somebody and you're paying it, you better put it on your 1003, your loan application, because that's how we calculate your debt to income ratios. Student loans is another one. You have people, and I was one. I had a whole lot of student loans, whole lot. I had a whole lot of student loans. It's so much I can't even count them. Hey, BC, Sherry. Hey, Chef, how you doing? That's my fam, guys. Grambling State University. So you have to have your those documents. And with your student loans, even if they're in deferment, even if they're in forbearance agreement, we still have to count a payment towards your debt to income ratios, because you're not going to be in forbearance forever, and you're not going to be, and it's going to come due. And especially if you're just graduating from college, they give you the 6 months, and then some people go in and ask for an additional extension. We're going to count a percentage towards your income. So you definitely have to have that income available. So we do count that. Hey, Foodie Squad. Hey, sis. How are you? Thank you for coming. Thank you for sharing me out, too. Okay, so back to it. So we got pay stubs, W-2. Then you're going to have to worry about we get an appraisal. And when we do the appraisal, sometimes you'll get money back at closing. But when you get it back, you best believe it's from the appraisal. So the appraisal is something that we will get, and we charge upfront for it, and the appraisal goes out. So if it's anything that needs to be done, they want to make sure you're coming into a house with not a whole lot of problems. So we look for dirt to earth to wood contact. We look for cracks in the walls. We look for the faucets. They turn the faucets on. They turn the heating on. They turn the AC on. They turn your water on. They check your water heater. The appraiser is to go through all of that when they're doing your inspection, because the one thing you don't want is to buy a house, move in July, and then in August, your AC goes out, or your termite Termite inspection is another one, or termites come up. And I'm going to tell you, that happened to me. Hey, Cubs Den, welcome. Thank you so much, my niece. Thank you for coming. So that happened to us when we bought our third house. We came in, we had termite inspection done, and we had, what was the other thing? Oh, we bought a home warranty. Now, I will tell you this, and it was not my third house, it was my first house. And me, I didn't know anything. I wasn't thinking. I was like, okay, at that time, I was in collections in the mortgage business. I hadn't gotten as far as I am now. So we didn't sign the paperwork and get a contract, and we had termites in the house. That cost us $1,500 to repair and to get a updated termite inspection. And then after that, because we had the not homeowners insurance, but the home warranty, my AC went out, and that was $800. But we had the home warranty, and we called, and they came out and fixed it. And at the third time, they just went ahead and replaced the AC unit. So I had a brand new AC unit within a month of being in the house. So they look at all these things, and you would be very appreciative of having these type of things in your home when you are purchasing. You want to make sure that when you come in, bad enough, you got to work to pay for it, right? Why do you have to pay for it twice? So people get upset when the underwriters send conditions back, and they don't understand why we do this for them, or they understand that but sometimes they're hiding things, or they get frustrated. That's why it's important as a loan officer to make sure that you get everything from that customer up front, and you diagnose all of that information with a fine-tooth comb. Because again, if that underwriter, every time that underwriter has to go into that file, he or she is going to find something else. So you want to make sure it's a smooth transition. And as a loan officer, you better daggone well make sure you go in and you check everything with a fine-tooth comb. Because loan officers have to go through training now. Back in the day, they didn't. All they had to do was, hey, Freeze Fire, hey, welcome, welcome. Thank you guys so much for coming. I certainly appreciate it. If you guys can keep me thumbs up and share me out, that's greatly appreciated. And this is my Mortgage Monday, and this happens every Monday at 7:30 p.m. Eastern Standard Time. And I'll have a topic each week. So thank you so much. So yes, again, we make sure it's nothing like getting into your home and have to come out spending money. You've already paid your down payment and your closing costs if you didn't get it paid for through a gift or through through the seller. So we try to make sure that you get in with a smooth sailing situation. So I am going to do another live on FHA, because FHA is a huge program, and there's a lot of yes and no's that can be done with an FHA loan. So just to let you know, this is just the basic FHA slides that I'm giving you. But FHA is a great program, and I recommend it to anybody. It's easy, in my opinion. People say I call it easy because I know the ins and outs. But if you got a good loan officer, guess what? That loan officer is going to be just as good as I am. And they will be able to help you with your loan and not have a problem. Does anybody have any questions so far? Thank you so much, Freezefire. Thank you. And I appreciate Miss Yo-Yo for sending you here. You are so welcome to be here. I'm glad to see you here. So yeah, come every Monday. You guys can come Monday, Wednesday, and Friday. I got something for Wednesdays, Wellness Wednesday, and Fitness Friday. So I'd love to see you guys here then. Okay, guys. So one of the things, we've been talking about bank statements, but we're talking about reserves. Now, FHA, they really don't want to ask for a lot of reserves, but they want to at least, thank you, Wilson, for real. Thank you. Thank you so much. So they want to see that you have some type of money left in your account after the loan closes, because you have the first, thank you, Natural Way. Thank you guys so much. Thank you so much. The first month, you don't have a payment for 45 days, right? And then once your loan is set up, your loan is probably going to be sold several times through the process of your loan. Mine sold a whole bunch of times before my first payment. But with that being said, they want to see that you have some kind of reserves. For instance, with what happened with me, the termites and the air conditioning. So they want to see some type of reserves. They don't want to see you paying all your money out at closing and you're left with $0. And then some customers will say, well, I'm paid next week, I'll have the money. That doesn't work. You may be paid the very next week, but guess what? You still got bills that you have to pay all the way. We look at that. We look at everything that you pay. So we know that's why the debt to income ratios is a big thing. So reserves. Keep you at least 2 months reserves in your account when you're trying to purchase a home. And please don't go out and buy a car or open up credit cards and have more debt. Because I know some people are like, oh, I got this house that I'm buying and I got a dining room that I need to set up. And they'll go out and start buying things before their loan closes, to be told that your loan wasn't approved. Now what you're going to do? So please just be cautious with what you're doing. Keep some reserves. And it's good to have reserves. It's good to have reserves. And I keep separate accounts. So make sure you do those things, guys, because we need the reserves in the account. That makes your file stronger. Hello, facts. Yep. That makes your file stronger. Thank you, Short Bus. Thank you, thank you, thank you. Yes, you must save up because, again, it makes your file stronger because you may not have the best of the best. Like, again, FHA doesn't make you have a 700 credit score or greater or a 650 or greater. But you got to make your file stronger. And if you have reserves, that's your first thing. Remember, I said reserves and credit makes your file stronger. So if you got reserves, and when I say reserves, you need to make sure you have at least your monthly payment and car note and credit cards, all of that. Try and have you 2 months reserved because things happen. And I'm not saying that I am the best of the best and never had anything to happen, because being in the mortgage business, I have been faced with many tragedies in the mortgage business that I was blessed to have those savings. But I don't want people to go and use credit cards to live off of, because that's not good. That's why I said do not overspend on your purchase. Do not overspend on your purchase. So reserves are always good to have. My auntie worked at the bank and she gave me the game about this. That's right. Tell your auntie I said kudos. Kudos. Auntie is right. Auntie is right. And since credit scores are in place now, see, back in the day, like my grandfather used to say, your word is your bond. And that's all you needed for credit. Or the neighbor to say, oh yeah, never see the police out here and they pay their bills and the bank hadn't been here foreclosing and he doesn't sell off the cows and the chickens and things like that for household debt. So that was the way it is. Thank you, Shay. Thank you so much, dear. I appreciate it. Okay, so we did a thing about credit score before, but since we're talking about the factors for FHA loan, these are the things that FHA looks into when they are examining your credit. Because remember, you're not getting a conventional loan with FHA. Conventional loans normally have people that have super high credit scores, a lot of reserves, been on a job. Speaking of job, let me back up. Your employment. You have to have 2 years of employment. Some people job hop and move around. And as long as they're in the same industry, they have to have a letter of explanation and say, oh yeah, I moved around because each time I moved, I got paid more money. Or each time I moved, the job had closed or I was laid off. So I had to keep providing for my family. So that's why you see a lot of job changes. They look at those things, guys. So they look at your job history. If you're moving around a lot or if you're in school, that's one thing. But if you're hopping around on a job, they look at that. If you're advancing income-wise and position-wise, that's fine. But if you are just hopping around or always out of work, and I'm going to tell you, the union is another hard task for me. That's another one that I'll have to talk to you guys about on another slide. People that work and they have the union, because a lot of times the people in the union, they get laid off and things like that, strikes and all those good things. Like AT&T used to have a lot of strikes and they were union-based. So, but again, credit. They look at the credit, and these are the things that they look at. Short bus pull up. Free space. So what's up, short bus pull up? So they look at your on-time payments. They look at your capacity of age. And remember, we talked about that. That has an impact on your credit score. The age of your credit has an impact on your credit score. The length of your credit history, the types of credits used. So if you have people that are out there buying, using credit for like, let's see, payday loans or pawn loans, even though pawn loans don't go on your credit, neither does payday loans. But remember, we talked about the company that actually, they do report. In other words, they do report. And I said that in the first live too, I believe. It's called LexisNexis. I need 800 credit score. Almost there. All right then. Congratulations. Awesome sauce. This is an awesome live. I just finished. Oh, NACA. You did the NACA. Okay. Awesome. And the virtual orientation. I'm going back to watch this from the beginning. Awesome. So if you do go back to watch this one, BC, Chef BC, if you don't mind doing it from another device, because it actually hits me if you look at the live that you've already been in. So if you don't mind doing that, that would be greatly appreciated. Yes, exactly. Short bus, paying on time it's actually, it matters. Yes, it does. It's mandatory. And Shay, yes, so yeah, they're illegal in some states. They are not illegal here in Georgia. And it's another one that they used to have out there too. It was called the, oh God, I can't think of the name of it, but they actually went over during the last crisis, and they were people that were wanting to be investors. I'll do it for my. Okay, awesome. That's fine. Thank you so much. I appreciate it. And you know, I have. I think this is by week 7, guys. I think this is week 6. So I have 6 weeks of information on there. So yes, they had some hard money lending. That's what it was. Hard money lending. And we had some cases here where people were wanting to be investors, and hard money lending was giving them all kinds of loans. And every one of those loans pretty much melted. It was horrible, horrible. And the subprime lending. Now, I was an account executive for for subprime lending. I hated that. I hated that job because I knew that people could qualify for an FHA loan had they not been in such a rush. Now, if they had given me 6 months to work on their credit and get their finances and things in order, I could have got them approved on the FHA loan. But they were so in a hurry to move. And then I would say 90% of them end up going into foreclosure because the interest rates were just crazy. The rates were, yeah, wow. The rates were like 13 and 14% on a house that was like a $200,000 or $300,000 home. There is no way in this life I would have done that. I don't care how bad I wanted the house. You know what I would have did? I would have took a picture and put it on my vision board. I would not have done that. So that's why I'm doing these lives, so that I can kind of get people abreast of what goes on behind the scenes. And hopefully it will help them to get better and stronger when they become homeowners, or if they want to refinance, or if they want to buy investments. So the past credit applications, things like that. If you are one that's like, all of a sudden you had 3 credit cards on your credit report, and then all of a sudden you had like 6 additional credit cards. That actually, I know, that actually affects your ability to buy, because they're like, you're either a shopper, you shop too much, you're shopaholic, or somebody. Just because people send you a credit card offer doesn't mean that you get it, that you should get it. Now, if they have the ones that have like points for the credit card and transfer balances, but I wouldn't get too caught up in that. I would not, because, and I will tell you this, when I was young, my first credit card, I was 16 years old. I was a authorized user on my mom's credit card, and I still have that card to this day. But as a youngster, 18 years old. Hello, Chosen Queen. Hey, sis, how are you doing? Thank you so much for coming in. So I started out with getting credit cards when I was 18 years old. I had a job, and credit scores weren't that big back then, but it was still an issue. They would, get your credit and give you the credit card. And I was going crazy. I was like, oh, I was working in the mall. So every department store, you got a credit card. So I had Riches, Macy's, Lord and Taylor. I had every credit card you could think of. And my wallet was so fat, I didn't have any space. Because I was crazy enough to get all those credit cards, not knowing what was going on. All I knew is I was 18 years old. I was out on my own, and I had credit cards. I had, what was it? Some kind of like Circuit City and McDuffie credit. I mean, I had so many credit cards. Oh, thank you so much. I appreciate you listening to me while you're at work. That's so awesome. Thank you, Chosen Queen. So yeah, I had all those credit cards. I was good with them. I had gas card. Why did I have an Amoco gas card and I didn't have no car? Somebody tell me that. Can anybody tell me why I had a credit card with a gas company, with a with a fuel company, and I didn't even have a car? Wish I would have known better as soon as you get in college. Yes, with no job, still gives. Yes, Chef. Yes, that is exactly. Thank you, Candy C. That's fake money. Yes, I'm telling you, I was in college. I wasn't even full time in college, and Citibank came in and gave us credit cards. I think the credit limit was like $300. And then a few months later, they raised it up more. And I was like, this is cool. So what I did was I used it to pay my tuition, so I didn't have student loans at that time for that particular college. And then the next thing you know, I go into the mall, and they're standing out there again, and they gave me another. Why did I have 3 Citibank credit cards? Why? And all to have turned around and went to work for Citibank, and that was my first bank job, was with Citibank. And that was my story about credit. So I tell you, it is not worth it, guys. It is not worth it. You just need one good credit card with good interest rate on it, and then maybe a gas card. And if you do have those, I wouldn't use it and keep it under the 30%. And if you keep it under the 30%, then your score will be fine. And on top of that, if you don't use it, some of them will close them down. Sears will close it down. Who wants Sears and Discover Card Credit? There's just high chart finances on that. That's the worst. Whew, I don't even want to talk about that. My first bank job was SunTrust. You had SunTrust? Wow, I used to do a lot of loans with SunTrust, Candy. Yep. So they did have, credit cards was just, back then they'll just give you a credit card if you look cute. I must have looked really cute because I had a lot of credit cards. I had a lot of credit cards, but I got rid of them. And when I got rid of them, I said I would never do that again. That was just crazy. But I got my first job at the bank with Citibank, and their hiring process was easy for me to get my clearance and everything. It was like, as long as you haven't, and I try to get funny on these lies too, Chef. I really do. But as long as you had, see, Candy said her too. As long as you hadn't killed anybody. No. As long as you haven't stolen anything, you were good. And that's how long ago that was, back in 1987 or 88. 88. And as long as I had never stolen anything, I could have went out and killed somebody. I was going to get that clearance. Of course, things have changed now, but that's the thing about your credit. You definitely have to learn how to say no, because back then they was stuffing them in your face. And they didn't have, what is that stuff called? Annual fees. They didn't have annual fees on them either. So with that being said, they actually, they were giving credit cards out freely, but they don't do that now. 15 amazing content creators in the chat. I think I've called everybody out. If I didn't call you out, please hit me up with a smiley face so I can call you out. But I thank you guys for coming in. I did have some share out, so thank you for sharing my live. I really appreciate you guys. 16. Oh, wow. Look at there. So thank you guys so much for coming. So we're going to talk about debt to income ratios now. Okay, so we've been talking about your income and how you have to qualify and you have to have a certain amount of debt to income ratio. Now, again, just because you qualify for a certain amount doesn't mean that you should go out and buy that big of a house. Make your house buying experience a growing thing, because you all know when you buy your first home, I know I did, you grow out of it. You either grow out of it, or you get tired of it, or whatever you do. So why not just take your buying experience in the same manner? People say, "Oh, this is my forever home." I said that about my second home, and now I'm standing about my third home, and I'm ready to move. So use that tool wisely. Don't use don't use that amount that you have the qualifications for. Take your time in buying your home, because you do not want to overspend, because things happen. I promise you, things happen. So just be very cautious of what you're spending. Debt to income ratio. So what we do is we take all your debt, we add them up, we divide it by a number, and then that comes up with your debt to income ratios, and that's how we figure out if you are 41%, 29%, 100%, 60%. We have that calculation. And I stated that in the first live, I think, that we were going to have a live that's going to talk about how we calculate your debt to income ratios. So that is something that I'm going to do that for you. And I think what I'm going to do is have my board set up so that we can go through it. So debt to income ratios, that's very important now. 41% is what FHA is looking for. No more. They will take less. But if you go through the automated system, which most of the lenders are requiring people to go through the automated system. I will watch the replay. I'm planning on buying a home next year. Awesome, Chosen Queen. Now do me a favor, Chosen Queen. If you're gonna look at the replay, please check it out on another device, if you don't mind, because that hits my numbers. That would be greatly appreciated if you can do that. Guys, if you're gonna look at a replay on anybody's live, please look at it on a different device, or wait till it's over the 30 days or whatever that statement that they're saying. Make sure there's no red line under it. But if you've got my live frozen, I think you can go back in and continue to look at it. So you can try it that way, but please do that. And if they are monetized, just watch the ads to help them out. You can go back and watch something and watch the ads. That helps them out. So just a bit of love that you can do for everybody. Okay, so again, debt to income ratios is very important, and we're going to talk about that on another live. I want to show you how we calculate it for FHA, VA, and conventional, because with each loan, it depends on your loan to value. That's how much you're going to have for mortgage insurance if you are going to have mortgage insurance. Now, with FHA, they used to have mortgage insurance only on the 20 and 30-year fix. You didn't get mortgage insurance on a 15-year. But since foreclosure has been so prevalent over the years, now you will get mortgage insurance on a 15-year note as well. The calculations are different, so I'll have to give you those calculations as well. Now, some of you guys, let me ask you a question. Since most of you are looking to buy a home or in a home for refinancing, any of you out here thinking about becoming a loan officer, or would you like to know this information? Because I think it's good to know it. If you're dealing with a loan officer, you want to make sure your loan officer is giving you what you need. So if you want me to do a video or a live on Mortgage Monday, telling you how we calculate the debt to income ratio and how we calculate the mortgage insurance and the principal, the PITI, which is the principal, interest, taxes, and insurance, give me a heart or a smiley face or just one emoji if you think I should do that in a live. And I will wait for that answer. I will walk with her on my laptop at home. Okay, awesome, Chosen Queen. Thank you so much. I really appreciate you, dear. Thank you so very much. Okay, so does anybody think I should do a live based on those items? Thank you, Anita Williams. I will definitely do that. All I needed was some answers. Thank you, Natural Way. So I will put that together. Next week, I'll talk about that. So we'll go ahead and keep going on our things. Now, again, we're talking, I'll wait till the slide comes up. But yes, keep in mind your debt to income ratios. And let me write my note here so that I make sure I put that in. And I think I got a plan on how I'm going to do that too. Oh, God. Okay, guys, I see the screen has turned over, and I'm just making a note. And just a second here. Okay, I just got notification that my phone's going dead. Of course, I didn't bring my charger in. Give me just 1 second, guys. I apologize. Eat to Live. I think you should do a series, make a few videos. 5 minutes only. 5 minutes only. You know, I talk too much for 5 minutes, but okay, I'll take that into consideration, Short Bus. Thanks for the suggestion. I will keep that in mind. I'll put that on my notes. And then let me go grab my charger really quick, guys. I don't want it to go dead on you. Just a second. Sorry. All right. So yes, Short Bus, I will take that into consideration. Hey guys, you know what? Since I've been up here, that bird has not squawked not one time. All right. So I got my charger. We good to go. 5 minutes. Okay, I'll do it. Should I do it as a premiere? Of course. I'm going to shout you out on it too. Okay, so employment. We talk about employment. We talk about it a lot, but I guess the more we talk about it, the more we'll become very, very aware of it. So again, we look at everything on employment. We take your, well, this is a good part that I haven't talked to you about. So with your employment, we look at your pay stubs. There's a calculation for Social Security. There's a calculation for Medicaid. There's a calculation for taxes. We break all that down. So when people think underwriters are just moving too slow and they're not getting your loan, hey, YouTube, Court TV. Hey, my brother, how are you? Welcome. So when she just squawked, guys. So when people say the underwriter is taking too long to underwrite my file, that is the things that we go through as an underwriter. We have to take your tax, we have to dissect your pay stubs. You know why? Which is another topic that I'm going to do, fraud. People make up pay stubs, but people don't always know the calculations, and they always get a number wrong. Something is always not quite right when we get pay stubs that have been made. So people did that and probably still do. We have what they call quality control. Thank you, Cubs Den. I appreciate you. So we have what they call quality control. So not only do the underwriter underwrite the file, it goes to a secondary person. And if it's a higher loan amount, it will go upstairs to a chief officer to review it and underwrite it. And then they will send it back downstairs if any conditions on it. And then they send it over to quality control to make sure there's no fraud. We have all kinds of systems to check for fraud. It's amazing. You guys would not believe how much protection they have. Yeah, making people fake pay stubs. That has happened. I'm telling you. I mean, guys, I should just do a video telling y'all some of the things I ran into as a mortgage professional in this business alone. It has been really, really bizarre. There is nothing that surprises me in this business. Nothing. So, but we do have checks and balances. We check everything. We check with your employer. We check, especially if you are self-employed. People will come in and say, I'm self-employed, or I'm self-employed. I work for my dad, for a family member. We have different scenarios. And that should be another way I should do this live. I should do a scenario live to show y'all the different types of scenarios that has been a problem in the business. And then, you know, the saying, the bad, the good have to suffer with the bad. And that's unfortunate that all the bad people have made it so horrible for the good people. You know, so it makes it harder for good people to get loans because all the bad that was in the business. So with that being said, we definitely check your employment out. We check to see if you're a floater, if you owe your employer, if you own the employers, because a lot of people actually own the company that they say they work for, only because they don't want to show their tax returns. They get their accounting department to cut them a months of check, and then they will send the checks in as if they did not own the company. I know that's not good, right? So they will write a check. They'll have the accounting department to write them a payroll check and do it as if they had been paid all of that time, right? We get it. We're doing the legwork behind it, checking it out. And then when we get to the end and we run this through one of our systems and it's flagged, and then we have to call. It's one call, 911, work number for everyone. We check that one, and then it's another one that we run through, and guess what we find? We find out that the customer actually owns the company. And the reason why he did not want to give us the tax returns is because he write everything off. So he wouldn't have been approved for the loan. So instead of him doing things the right way, he decides to become fraudulent. Now I'm going to tell you now, these banks don't play. They will take you to jail in no time flat. They do not play. I'm speaking late because I'm at work. Oh, yes, guys. Chosen Queen she's listening and she's working. So if you guys are saying hello or if you want to connect with her, she is at work. So she's listening. But I'm sure if you send her a message, she will come back to you at the end of the live and when she gets off, because she's going to come back in and watch it later. So I appreciate you guys. So yeah, they do some of the weirdest things. And the bank will now, they will prosecute. They will prosecute. And nothing's like being able, I'm too scared. I'm not going to jail for nobody. Sorry. I'm not. Nope. I like to get up and go outside when I want to go. I'm not one of those. So I'm the one. Call me a snitch if you want to, because I was telling. I sure was. I'll shut down a closing in a minute. I did not like that. I was not going to go to jail, because until you've actually been in a closing and the FBI, GBI, and all the people coming in with their guns and stuff pull, you wouldn't do it. And I'm like, nope, not me. Not going to be the one. 18 amazing people in this chat. I totally appreciate you guys from coming out. You guys are awesome. And I'm so glad that you guys are actually really enjoying the lives. I try to make the videos, the slides nice and crisp and pretty. And I try to give you jokes all through it. But a lot of it, I may say things, no jail food. That's, no. And I'm vegan too. Please, can you imagine what they'll give a vegan? Or a person on keto? Not. No, I cannot take the jail food. Not at all. Cannot be locked up. But I try to make these informative, but I also try to break the ice a little. And I got something different I'm going to do next week with the lives too. So I hope you guys come through with me again next week. So, okay. So the next slide. The approved property types for FHA. FHA will do a single family residence. They will do a condo. They will do a townhome. They will also do a 1 to 4 unit. And on all of these, you can purchase as a home owner, as a primary resident. They only do a investment if you had the loan and you decided to move out. They don't like to do investment properties, but they will do it on a 1 to 4 unit, because you can't live in all 4 units. I mean, you could, but that would be kind of crazy. So they will actually finance that as an investment property. If you have investment, just keep in mind you got to have 12 months of reserves on not only that property, but your primary residence and any other thing else you have. So they make sure that those are covered. They will give financing on, believe it or not, they will finance. Now I'm going to hate the manufactured homes. They will give financing on manufactured homes. And now they are assuring that the properties have to be affixed, meaning that it cannot be on bricks. It's got to be affixed to the foundation, because we've had people to, thank you, Eve, I just got on break. Okay, you're welcome. So yes, so we've had situations at the bank where, or even the mortgage company, where the customer was behind on their mortgage and said they didn't want the property anymore and they didn't care. Well, the property was on a piece of land. Guess what? The repo man came to take that manufactured home away. Guess what? It wasn't there. They hitched that thing on a truck and got moving. But even though FHA will allow that as part of their financing, there are stipulations. They have to have the VIN number. It has to be affixed, and it has to have running plumbing and everything through the county. No mobile home, because the value is going to drop. Yeah, but in certain states, like down south, south of Louisiana, they still have people living in mobile homes. South Georgia, so all of the states have them, and they don't finance land. FHA doesn't finance land, so people have the land, and then they will buy a mobile home and put it on there. So, with that being said, that is some of the other things that they do. Is can I get my phone to charge? What in the world? So, but anyway, those are the type of housing that they do: single family residence. They do a condo. They do townhomes. Now, with condos, they have to be approved condos. And what justifies an approval of a condo is if they don't have a lot of people that buy condos and they don't pay the homeowners association. And if you don't pay the homeowners association fees, guess what? That amount just increase, and then people that good have to suffer with the bad, because whoever's paying the association fee each year goes up and up and up. So it starts getting a lot of foreclosures. So they do a questionnaire, and certain things have to meet all the requirements in order for FHA to allow that property to be financed as a HUD or FHA loan. And the same thing with a PUD, the planned unit development. That's another one too. They don't have association fees, but they have like swimming pools and tennis courts and things like that. And then of course you have to have the approval for that. Now, with a condo, the MI used to be a certain percent, but now is it cheaper to build from the ground? That's what I was told. Well, it depends on what you call cheaper, because some of the homes you can find really good prices on. I cannot tell you it's cheaper too big because I don't do construction lending. And it depends on the only thing I can tell you that's good about it is that you're getting what you want. You don't have a builder that's building something, you're going into the subdivision and you're buying that. But building from ground up, some of the homes that they're already built is actually just as good. You don't have the problems with older homes. Yeah, you do. You will. I've known people that buy, my uncle, for example, he has a $1.7 million house through a big time builder. And that home has had some problems. It was brand new. Yeah, mobile homes on the run. They were gone. And that wasn't the first time. That's why they changed it. So Chosen Queen, it depends on where you are, the land, the cost, and what you're looking for. Because in it, you got to have some good construction builders. And then that becomes a construction lending property. Now, FHA will do a 203K loan. That's for people that need to do repairs on a house that has been deemed as inhabitable, or it was a property that may have been foreclosed on and they need to do updates. But for your construction lending, that's going to be more on the conventional side, and we will talk about that on another live as well. But that's your preference to find out if you got your plans, your specs, who's your builder, what you're looking for, how much you want to buy. It's a lot in cost with that. Whereas a regular property that's already built, you go in and move, but you need to get your inspections done and get your insurances. So with that being said, conventional and PUD and all those things are considered a type of loan that the approved loan that FHA will approve you for purchasing. So single family residence, condos, townhomes, 1 to 4 units, they all are approved through FHA. Does anybody have any other questions regarding the previous slides? I'm moving on to the next slide. Anita Williams says, living better with smiles. She's laughing at your mobile home on the run. Make you think when you're riding down the freeway and you see the mobile homes on the wheels, wonder if they took that off the property so the bank can't get it back. But they no longer allow that. They make them affix it to the ground, to the foundation. Okay, guys. So this is the last and final slide for tonight. You guys rock. And on Monday, June 15th, we're going to talk about what? FHA versus conventional. Oh, thank you. Thank you. Thank you. Thank you. I'm so glad you'll be back. Thank you. All I missed what she was saying. I missed what she was saying. Chosen Queen, were you talking about living better or me? Oh, now I will. If you need me to stay behind, I will. Stay in and catch you up if you need me to, because I know you were on break. Unless you want to just catch it on your when you're on your, I think you said your TV or when you got home. But I don't have a problem. So we are going to talk about FHA versus conventional loans. So did anybody have any questions? And listen, guys, next week when we talk about FHA versus conventional loans, this is a big topic too. So if you guys have questions as you think over the week of the topic today or any of the topics that I've given over the past 5 weeks, please come with questions. Hey, Jaden, I thought you were still in here. Hey, thank you for coming back. So if you guys could have questions for me next week, that would be good. I love to answer questions. I love for people to tell me their experiences. Yeah, all of that is welcome here. This is a forum that is a no judge. I don't get paid for this. I just love to tell people the experience that I've gone through. I want people to be very knowledgeable of these things because I want everybody that's in my circle successful. So that was my reasoning for doing Mortgage Mondays. Now, granted, I'm Eat to Live Strong. Don't know what happened, but I can hear you now. Okay, I'm sorry you couldn't hear me. Oh, okay. Sorry about that. What was the last thing you heard me say? We can go from there. But guys, that's the reason why I decided to do the Mortgage Monday, because my channel, of course, is about eating healthy, eating to live strong. So that's eating healthy and fitness. But of course, if you want to live strong, you got to be comfortable in your home. And if you got stress on your mind because you can't pay the bills or you got a bad loan officer, amen, thank you. You're welcome. Is it harder to sell a home you had built because you had it customized? No, actually, it is not. Right now, it's a market that now loan officers are calling around asking other loan officers or asking realtors, hey, you got anything for sale? You got anything for sale? You go to your mailbox. You're gonna say, you said it depends. Depends, and then went out. Oh my! I don't know what that was. I don't know exactly which slide. Do you know what slide it was on? Do you remember this? Oh, you're not looking, or you're listening. Oh my, chosen queen. I don't remember. Sorry. So, living better. Yes, if it's loan officers and real estate agents are calling constantly. You get to your mailbox and somebody's out there. They're even calling the phone and texting you. Do you want to sell your house? Do you want to sell your house? I'm like, oh my goodness. Come to find out, the loans are being approved, but they don't have properties. Is it cheaper? Okay. If it's cheaper to build your own home. Yes, and my answer to that was it depends on what you're trying to buy. If you're trying to build, of course the cost is going to be affiliated with the builder, the land, what type of property is, if it's I don't know why it's doing this to my charger. It depends on if you are having sorry guys, sorry, I'm trying to get my phone charging. So there we go. So it depends on if you have a builder that's going to do a brick house or a wood frame house or an aluminum siding. It depends. All of that comes with what you're wanting in your house. It doesn't mean that it's going to be cheaper because builders build the same type of homes. So because as a builder, as a person that's having a home built from the ground up on your land, you got to get plans and specs, which actually that costs pretty good money. Then you got to get the county to put your water lines in, and you have to get the county the electric has to be done. They have to pour the driveways, the easements. You have to have the concrete laid for your all those things take into effect. So it may not be the best, but it just depends on what you're trying to buy. Now, FHA is not a construction loan type of loan. So that would be more of a conventional loan, which we're going to talk about conventional loans next week. Now, did I answer? Let's see, that's what I want to do. Bill for my likeness. Okay. Then yeah, do you have some land already? Because then you have to get a land loan too. Living better said that would be a great option too, chosen queen. You're welcome, chosen queen. Yeah, you have to do your pros and cons, just like with anything. So even if you buy a house in subdivision A as opposed to subdivision B, you still got to weigh your pros and cons. Is the traffic bad? Is it a good area? Is it the school's good? You just have to do your pros and cons. Is that no for me? Or is that no saying you didn't have any questions? In your best professional opinion, what is the best county to reside in Georgia? In Georgia, I'm going to say, and Gwinnett County is a great county for the schools, our taxes. We have our own transportation, public transportation. Marta doesn't come here. Hey, Marley, how are you? Thank you for joining. You don't want to own land. Okay. So you want to go into a subdivision and then have your own home built. That's already, you still have to purchase the land. You remember the dollar homes? That's right. So you remember that. I'm in my sister lives in Decula. You're not far from me. Gwinnett County is one of the better counties. I thought you were in Georgia. I was going to send you the message yesterday and ask you that. So yes, you're close to me. We live about 20 minutes apart. I'm in Lilburn. Yes, I do. Yes, I do. So you want to purchase a home. Okay, so is that for you saying And I know you don't want to type the same thing again. Just drop me a heart if this is the answer, Chosen Queen. You're saying, yes, you do want to build a home in a subdivision. My husband likes Fayetteville. My grandmother was from Fayetteville, Chef. And when she was there, it was dirt roads. It has grown a lot. Fayetteville is Fayetteville is okay. Peachtree City is great. Gwinnett County has a lot of traffic, but since Cocoa has been around, the traffic's not been so bad. Okay, so if you're gonna buy, this is the thing with that, Chosen Queen. If you're gonna buy a property that's, if you're going to build a property on in a subdivision with land, if that builder has purchased all of that land, he will have to build your home. So you would have to get, if you don't want the same homes that that builder has built in that subdivision, then you will have to get approval from him, he or she, to build a home how you want to buy it, to build it. But that land still belongs to that builder. So that land is going to be part of your property. But that's if the builder agrees to letting you build on his subdivision. That happened in Southwest Atlanta with my uncle. He purchased 2 lots and he didn't build. And the builder kept saying, you cannot build but one house. You have to build a house on each lot. My uncle held onto the lot. And then after the builder finished, he went in and built his $1.5 million home on that lot. And the builder took him to court. Of course, he won because somebody slipped in the paperwork. But you would still have to get the permission from the builder. And you would have to buy the land because the builder buys the land to put his type of housing. That's what his plans and specs are for. So that's what happens with that. I was born in. Oh, I had a customer in Elberton. That's close to is that Milledgeville? I think it was Milledgeville. Yeah, I think that's close to Milledgeville. In Sandersville. Hey, can one of my mods please drop Tiffany Chanel's link because we're gonna raid Tiffany after this live. She goes on at 9 o'clock, so we're gonna raid Tiffany Chanel. And guys, if you go over to the live, please say Tiffany Chanel raid. Even if you're already over there, please. Put Eat to Live Strong raid. Even if you're already over there, just say Eat to Live Strong raid. I would appreciate it if you guys could actually give her at least 15 minutes of your time. That's greatly appreciated. And watch her ads. I'm so excited to follow you. I have to share you out on my Facebook and Twitter. Great content, very relevant. Thank you so much. That is so sweet. I appreciate you saying that. And I welcome you back. I really do. And you know what? If you have Instagram or Facebook Messenger, I will message you and give you my information. So maybe we can meet, because that was the thing I said to you the other day. I wanted to talk to you about event planning because I do plan events as well. And since your title says chef, and I saw your congratulations to a person that was graduating from Georgia Tech, and I could use you for event planning. So I'm going to reach out to you on Facebook or Instagram. So if you have Instagram, if you want to put your Instagram or your Facebook in the chat, you guys are welcome to do that so that we can actually keep in touch with each other. Chosen Queen, did I answer all your questions? And if I did not, yes, that's right. Living better. Yes, very close. I'm this little bitty town in the center of all these bigger cities. So if you guys, if you want to put your, let's see, wife and I own a catering business here in Georgia. That's awesome. So I can always, where were you when I had my my 50th birthday party 2 years ago? So if you guys want to drop your Instagrams in the chat, that's fine. Your Instagram or your Facebook, just so you guys can connect and keep in touch with each other. Please don't use the word connect or what's the other word? Anything with the C. Don't use it. All us folks in Georgia in here. Yep. See, Marley is my She's my road dog. We we went to the same college. And we lived in the same neighborhood. I promise you we ran into each other sometime or another. We just didn't know each other then. Okay, so can one of your mods drop Tiffany
It's
Chanel's
9 o'clock.
Live, I'm sorry, her thingy for me, please? Do I have any mods? I have Living Better. Are you the only one in here living better? Short Bus. Is Short Bus still in here? We're gonna raid Tiffany Chanel, guys. That would be awesome. I always try to end my live by going to Tiffany Chanel's. So give me a second. Let me go ahead and um, get her link here. Her linky link. Oh, thank you, Living Better. You're awesome. Thank you so much for dropping the link. So, guys, does anybody have any questions or suggestions for next week? Because we're going to talk about FHA versus conventional loans, but also Short Bus gave me an idea to go ahead and do a 5-minute. Let me write it down. See, I forgot just that quick. What did Short Bus tell me, guys? Let me go ahead and look because I don't want Short Bus on my case. He'll put me on the Voltron and he'll talk about it. Let's see what he said. No mobile home. Okay. Guys, what did he tell me? Does anybody remember? Short Bus, if you still in here, tell me what you told me. Because I want to make sure I do it right. It said 5 minutes. Oh, I cannot find it. Does anybody see what Short Bus asked me to do next week or for a video? I don't see it. And that should jump right out. Okay. He did not retract it. I know he didn't. Okay, I'm gonna have to hit him up and find out what he said. Okay, so guys, if there's no more questions, we can go ahead and raid the beautiful Tiffany Chanel. And I thank you guys so much for coming out. I'll see you guys on next Monday for Mortgage Monday. I'm here on Wednesday for Wellness Wednesday, and then Fridays for Fitness Friday. All of the times are at 7:30 p.m. Eastern Standard Time. I look forward to seeing you guys. I love you a long time, and I do really, really, really appreciate you coming in today. And before I jump off of here, give me just a second. I was told that I need to be more open with you guys. So give me just a second and listen to my what people say to me. So give me just a second so you guys can actually see your girl here without seeing me behind the screen. So I want to thank you guys for coming. Here I am. So thank you guys for coming out, and go ahead and rate Tiffany Chanel and say eat to live strong rate. So I thank you so much. Love you long time. Bye. If you have any suggestions for next week, or make sure you bring your pen and paper and questions, send me a message on my Instagram and I'll be happy to comply. I always try to listen and give you guys the right information. So I'm going to go ahead and go over to Tiffany Chanel. And I just wanted to tell you guys, thank you again for coming out. So let's get rolling. I see you guys, and I'll leave the live up too for a few minutes. So if you guys are connecting, or if you guys are trying to, good night. Thank you, Marley. If you guys are trying to get each other's Instagram, you may do so. Natural Way Akati is a awesome, awesome person. And you can get all the information, her name says it all, Natural Way. Check her out, guys. And thank you so much for coming, guys. I called everybody out, looks like I have. And I really appreciate you guys for coming. I'll see you guys next week or Wednesday or Friday. God bless. You are most welcome. Money Makeover Monday. Y'all go check my girl out. Tiffany Chanel. Oh, so you guys are connecting out there with your Facebook and your Instagram information. That is so awesome.
Personal
Y'all
data.
watch those
And it
ads.
doesn't just
Thank you so much, Living Better, for always being here and hanging with this group. You are wonderful, and I'm glad you learned a lot today. And God bless you as well. Much love. Love you long time. I'm going to open up the chat again so that I can show some of the slides just in case somebody comes in for the next few minutes. So thank you for joining me. Hello, Yolanda Johnson. How are you? Thank you for coming. Thank you, thank you, thank you. How are you today? I am going to open up the screen here. I left the live running, but the people, my people have gone over to Tiffany Chanel to raid her. We finished the presentation, but we talked about FHA loans today. Was it something that you want to, is something you talk about on FHA loans? Do you know what an FHA loan is? Are you looking to purchase or do you own a home? I do appreciate you coming. If you can give me a thumbs up, that would be greatly appreciated as well. We talked about FHA loans today, why it was popular, um, the guidelines. We talked about what FHA meant or who it was. We also talked about loan to value, DTI, which is debt to income ratio. So we had a pretty good slide today. And if you're interested in reviewing the full video, the full live, it is going to stay available on my channel. I don't close them down. So if you had questions, if you want to go back and check some things out, you can do so. Is there anything particular that you wanted to talk about on FHA loans? Can you actually hear me, Yolanda? It looks like Johnson. Can you actually hear me talking? I see there's 4 people in the chat. So that's me and then 3 others. I see Yolanda. Is it 2 people in the bushes? If you are, welcome. I appreciate you guys for coming. If you can go ahead and give me a thumbs up, it's greatly appreciated. If you had any questions regarding purchasing a FHA, a home that's under an FHA program, I would love to speak to you. We talked about FHA today. We spoke about VA loans back on Veterans Day. And next week, we're going to talk about conventional loans. So can you actually hear me? Hello? Just checking to see if you can hear me. I am here. This is Eat to Live Strong. So I'm going to go ahead and read the disclaimer, just in case someone is in the woods and they want to know that I am a licensed mortgage professional and that this chat is not meant to clean credit nor provide loan approvals. I am simply here offering advice and support to make a healthier credit profile and homeowner experience. This chat also does not constitute a loan approval or any interference with a lender or a realtor. With that being said, if you have any questions, I'll be happy to answer them for you. If you need some references or referrals, I'll be happy to give, I'm sorry, not references, some referrals. I'll be happy to give you some referrals according to your state. So the hype with FHA loans was noted that you have very minimum, very low down payment. The rates are good. Also, you have the opportunity to finance a loan with a higher debt to income ratio. However, there is still actual guidelines. With that being said, the credit scores, most lenders want 580, but there are some lenders that will not go that low. So it just depends on the individual lender. Also, even though you may have a decent interest rate or you may have a good credit score, it all depends on the overall picture of your profile. So the lenders actually take that into consideration. So typically an FHA loan will let you finance at 97%, 97.5% to be exact. And you can get your entire down payment can be a gift from a family member. So when we were talking about FHA loans, I explained to everybody that the federal FHA stands for the Federal Housing Administration, and it is a United States government agency that was founded by President Franklin D. Roosevelt during the National Housing Act in 1934. Also, HUD, which is the subsidiary of FHA, it is the Housing and Urban Development, and it is a cabinet department in the executive branch of the United States federal government. We talked about the different guidelines with an FHA loan, and with that being said, each individual lender has their own set of guidelines for financing loans. However, FHA has their own set of guidelines too that lender must also follow. So they look at your whole profile, your credit, your income, your bank statements, um, and they do what they call a case number. Appraisals, title work, all those things are reviewed through the lender, and they all have to meet certain guidelines. Like, for instance, FHA will not allow you to purchase a home that has wood and is sitting in the dirt. You have to have a termite letter, and you have to make sure that there's no wood to earth content. Your property must have screens. If you have like burglar bars, you must have a lock form on the inside, on the windows, because of security purposes. So they have a lot of guidelines that the FHA underwriter has to adhere to during the process. So now this is week 6. I believe this is week 6. It may have been 5 or 6 since I've done the Mortgage Mondays. And so with that being said, um, we talked about what was needed to get you qualified for your loan. And I just reiterated that in this live today, that you needed your typical 2 months bank statements with all pages. And even if that last page says that it is left in blank intentionally, we still need that page. It also talked about we need your pay stubs. We need consecutive pay stubs. So if you pay every week, we need 2 months of pay stubs. We need every pay stub you've had for 2 months consecutively. We need your W-2s if you are W-2 employee. We need 2 years of W-2s. We need your full tax returns with all schedules and all schedules and forms if you are self-employed. We also needed to have your your Social Security card. And also, if we were doing your loan as an FHA, we would need, of course, some need termite letters, some need um, septic approval, and we ordered the appraisal. So they're going to look at your reappraisal. They're going to make sure that everything is upstanding before they release that loan for an approval. And Yolanda Johnson, if you're still in here, it would be great if you can let me know if you have any questions or concerns. I see 4 amazing content creators in this chat, one of which showing in the chat, and 3 are upstate in the walls, in the bushes, or wherever you may be. I'm just happy that you are here in the live today. So I thank you for that. Please give me a thumbs up on the chat on this presentation. Share me out and make comments. I would appreciate it. So the next thing we talked about is reserves. Miss Yo-Yo, hey. Got me all scared. Love you long time. Love you long time. I know. Laugh out loud for sure. I probably did better this time than I did earlier on the presentation. Oh Lord, way too funny. 5 amazing content creators in the chat. I want to thank you so much for being here. If you have any questions regarding the FHA mortgage or any of the Mortgage Mondays contents that I have provided over the past 6 weeks, please feel free to ask. I'm here to answer your questions. Thank you again. Thank you, thank you, thank you. Please make sure you thumbs me up. Hello, AKA James 615. How are you? Welcome, welcome. Thank you for coming in. We have we finished up the live, but I'm staying here just in case someone came in because I shared out a lot of people and a lot of people shared me out. So I just wanted to make sure anybody came in. If they had any questions about an FHA mortgage, they will have the opportunity to ask me. I'm going to be on for about another 10, maybe 15 minutes. So if you had any questions, feel free to ask. Please thumbs me up. I would appreciate it. I'm so glad to see you here today. Thank you for coming. All right, guys. I want to thank everybody for coming out to join me today for another Mortgage Monday. Everything was successful. I think it was. I would love to hear your comments and let me know what you thought, any suggestions that you have for future lives on Mortgage Monday. But also be sure to thumbs me up, share me out, and always,
All right,
always
guys.
subscribe.
I want to thank everybody for coming out to join me today for another Mortgage
comment.
Monday.
I have no
Everything
idea why
was
this thing is going
successful.
crazy.
I think it was. I would love to hear your comments and let me know what
That was very weird. I forgot to turn my phone down. I apologize. So I would like for you guys to come back out to see me on Wednesday, Thursday. I'm sorry, Wednesday and Friday. So Wednesday is Wellness Wednesday and Friday is Fitness Friday. They're both at 7:30. All my live streams will be 7:30 p.m. Eastern Standard Time with Mortgage Monday, Wellness Wednesday, and Fitness Friday. So I hope to see you guys again. And thank you so very much for joining me today. Love you long time. And please comment and let me know of any suggestions that you have. Would like to accommodate you guys. Thank you so much for hanging with me. God bless you and have a great night. Bye bye now.